Good afternoon, everybody. My name is Pete Renzulli, and welcome to the T3 Live Daily Recap. Interesting day today, especially considering yesterday's obvious day to be long and to be a buyer. If you remember from this morning's morning call, I'm just going to zoom out here in the spiders to the 15-minute chart. We had actually started out this morning saying we're opening up at or near what was basically a 50% retracement from the last push down in the spiders, and we were looking at 143.50 as the level that if we opened up, which we did at that time, and pause at that level or flag intraday, it would be setting up a very high probability continuation of yesterday's move. So essentially what we had is we had the close here yesterday, a push up here pre-market, and open up in this area, and we were looking for it to flag above this 143.50 area. Now here's the important part of that. As a trader, you must go into the day knowing what you expect to happen, so you will be very aware if it does or doesn't unfold. Now here's where a lot of traders get in trouble. They'll make a game plan, know exactly what they do or don't want to see, and then don't follow it. We had a pretty clean game plan this morning. We said if we don't flag up in that level, it's not what we want to see. If we pull back, we were looking for the prior day's high, which as you can see here was the 143 level. It would have been the next spot for us to be looking to bid if we did not hold the bid immediately or flag up in this area here. You can clearly see here we had just the opposite of what we had yesterday morning intraday on the 15-minute chart. We had 1, 2, 3, 4 candles in a row, what we now call well offered, lower lows, lower highs. All of them didn't close on the lows, but pushing down to new lows was significant there. Now what was interesting was the market was actually hanging in here in the middle of the day while quite a few bigger stocks were getting hit hard. And I guess we'll start out with Apple. Apple pretty much out of the gate never really looked back here on the intraday chart. We had mentioned it earlier in the morning. We had said that if you have a long side bias in the stock because of how strong the stock has been for the better part of the most 12 to 16 months, please pay attention to the charts and don't get blindsided by your opinion. And today, $20 move from high to low, roughly give or take $1. So very, very important to be paying attention to what the charts are telling you, not what you would like to see. Now, the one thing that was baffling me a little bit this morning was the spiders and the market in general were hanging in there, if I'm not mistaken, right around midday with quite a few bigger stocks, especially energy stocks and metals and miners getting hit today. The market was hanging in there, and it was confusing a little bit because you're looking at everything, you're saying we should come in, we should come in, we should come in, and we're not, which leads me to the next point of doing a recap and making it into a trade lesson. Okay? Don't always be in such a rush for the market to do what you want it to do right away or exactly, because today, as much as we spoke about yesterday, where there were certain parts of the market where there was the internals, the VIX, the ticks, and whatnot, all having confluence. Today we had kind of the same thing on the opposite side, but again, going back a long time in, I guess you would say, trading folklore, for lack of a better way of putting, that ultimately become cliches and guidelines. Market leaders will lead the market, and today a lot of the market leaders, and we're going to get into what I'm talking about here right now. We're going to start out with USO. Clearly open lower, push down. OIH, actually OIH is very interesting. I'm going to go out to the daily here and actually go back to USO for a second. One of the comments that we had made today was this flagging really nice after a push down. We had mentioned, you know what, I'm going to go through the tech stocks in a second. Go through Halliburton, BHI. Nothing was left out there by itself to show some strength. Even though a few stocks were positive from the previous close, virtually everything on my list right now, other than Morgan Stanley, which is only positive from the open by 2 cents, was the only one that showed a little bit of relative strength. So what's the point I'm trying to make here? I want to get into one stock that we mentioned very, very clearly this morning, and that was IBM. And we're going to pull this up again on the 15-minute chart. All right. One of the trades that you should always be looking for if you're trading flags, especially if in this case a bear flag where stock would push up 1, 2, or 3 days, and we'll get into the daily chart of IBM here in a second. The first trade of the next day would be looking for the stock to make a test of the previous day's high and then resume what would be your downtrend in the case of a bear flag. And you can see we actually got this right out of the gate where it tested the previous day just below 198, got up there right away, had the opening range, and never looked back. Now, One trader actually in the virtual trading floor this morning had actually made a comment that I missed the move. Now, as a trader, it's very, very important for you to be aware of missing the initial move and the idea being over is not the same thing. So basically what I'm telling you is buckle up. If you still like an idea, do not leave the idea. Missing the first trade is not that big of a deal if it's quote-unquote a real move. And you can see here in IBM, it bounced roughly from 195 to just like 196.25, but then it gave you some pretty clear signals. Topping tail, pivot high, and a push down for another $1.50. It's very important as a trader to differentiate between I got stopped out or the trade didn't follow through or I missed it, and then just go to another stock versus you still like the idea, simply look for another entry. I cannot tell you clearly enough the amount of times that I would put on a trade, not make money on the first one, stick with the idea, maybe get a better price and more shares at the right price the second time, and then the trade follows through. So it's very, very important that you do not give up on what you might consider to be a good idea just because maybe you missed the perfect entry or you missed a trade. The second part that I want to bring up is in reference to holding trades that aren't working, especially if you have a bias. As a long-term trader, meaning a trader you want to be over the long term for a career, you are trading for the probabilities if you believe you have an edge over many, many trades. And if you are focused and refuse to get out of one trade that's not working, that means you're trading on a trade-by-trade basis as opposed to allowing the trades over a whole bunch of trades to play out the probability. So if you're holding one trade, you're essentially saying to yourself, I have to hold this trade because I'm never going to find another opportunity, which is, we all know, is ridiculous. The job is to keep yourself in the game. And the reason I keep bringing this up is there are quite a few traders that listen to this call that really, really are long buy-side focused. If that was you and or is you, and today was not your kind of day, it's very, very important for you to kick the trades out that aren't working, keep your losses reasonable until the market lines up and offers you the opportunity that fits in your wheelhouse, or as Mark Sperling calls, knowing what environment you live in. So we're just going to do a quick rundown here again to recap the day. As we said, we just covered the IBM. We mentioned CVX and the bear flag and CVX for the last couple of days. So here is the bear flag 2 days ago, pretty nice day down. Yesterday is inside day and then another push down. Interesting that it closed right at the 200. The downside on this here, if it opens lower, you're looking at the below the 108. But it's going to be interesting to see because the 200 came in as support. I'm going to be looking for the 200 and the prior day's low right around 107.75 to be support before I start to look to short there. One other interesting one today was BIDU. I think everybody on the planet is looking at the same level right now who trades the stock on a regular basis. It was called out in the virtual trading floor quite often this morning, 106, 106, 106. And again, if we can zoom back to the inside day, when everybody's looking at the same level, it's tough for it to push through there the first time. So you can see here 3 times prior to 11 o'clock, it pushed down, just got below 106, didn't get through there. I actually shorted it twice, didn't follow through, let it go. And then next time it came down here, I actually had it off of my radar because I was in a couple of stocks and I didn't want to get short again after it came in $1 already. So BIDU on Monday, looking for it to stay below 105 because we go out to the little longer time frame chart. You can see that 100 is a double bottom down there going back to a year ago and from the summertime. Very important, by the way, to look at those longer term time frames. Getting into some more of the energy stuff, XME. Again, really good bullish day yesterday, but we did point out pre-market today that basically we're in the middle of this 2+ month trading range. So the edge on that 1 day pushing to the upside wasn't that big of a deal. Most of the stocks we were looking at was nothing more than a good solid day yesterday, looking for today to push higher flag, give us a spot to lean on, to bid into, with yesterday's high being a support. Did not get that at all today. Maybe there was one opportunity around 10:15, 10:30 when we started to pull back into a lot of these stocks and yesterday's high. There were a couple of clean entry patterns, whether it was a wedge, bottoming tail, or a pivot low. Did not hold. So if you took the bid into yesterday's high as support, not a bad idea, just didn't follow through. And again, that's something very, very big as well. You must start saying to yourself when you place a trade, would I take the trade again because it was a good idea? You have to get out of the thought process the trade wasn't good because it didn't make money. It's much, much more important to know you're doing what you're supposed to. So if you bid strong stocks that didn't follow through today and you lost some money on it, that's an expense to doing your business. Now, what about Monday? How does this recap set up for Monday? Well, the volume, again, let me get into the volume on the downside has picked up. and we had said this morning that we wanted to see, will we get followed through? We didn't get followed through today after 9:45. I mean, there's really no other way to say it. We had the gap higher, we were trading higher, and then we pretty much went neutral within that first half hour. I'm looking for the market to open lower again on Friday. I don't have any positions, but I don't know how you could be looking at anything other than guarding your longs right now if you happen with a really tight stop loss, or possibly looking to add to shorts if you do get a good push to the downside. One interesting one here is GG and ABX. GG, very, very strong. Obviously, big gap up, held the gap up. And yesterday came in after a little bit of sympathy play with ABX coming in over 6% yesterday. But GG is now pulling back into duplicate moving averages here, the 200 and the 50 on the daily. So it might be something interesting to look at just based on moving average support. Now, the moving averages are not rising really that much. Maybe you could say the 50 is a little bit, but they're pretty much neutral, so it's really nothing more than bidding into what might be perceived as a significant reference point, especially after the stock gapped up and held pretty strong. It's really more of a trade that's selling off because of how much ABX has come in the last 2 days. You can see it right there. All right, so overall, the financials finally took a break today. Goldman was pretty strong, and we had actually very interestingly, Goldman and JP Morgan, if you remember in the morning call this morning, we had said a higher opening was setting up a less than optimal reward to risk potential, meaning the reward up into the resistance here did not warrant getting long because the resistance level was only about 50 cents away. So you were really risking 1-to-1 at best there if you were trading off of the previous day's high, and we pretty much got exactly that type of day following through. Now, the one stock that was a little interesting today was Home Depot is actually showing some really solid relative strength intraday today, and you can see pretty much didn't break down until 2 o'clock in the afternoon. Now, in this window here, when the market was actually getting hit pretty hard that first hour, you can see it actually stayed above, never mind closed above the 8 EMA on the 15-minute chart that whole time, and I was starting to believe that the stock was showing some pretty solid relative strength there. And then you start to play some games in your head. You're like, well, you know, where's everybody going to go with the hurricane? They're going to be going to Home Depot. So, you know, I don't get into the news a little bit too much, but it turns out that it started to roll over like everything else. So spend your time throughout the day making your list of relative strength, relative weakness. Again, I can't stress it enough. A lot of our community is long buy side, meaning they're only looking for spots to buy. If that happens to be you, I noticed a tweet by Scott Redler yesterday, which I thought was right on the money, and he basically said you have to make sure that you're trading the environment that you're best in, and if the selling pressure or bearish or selling environment is not the tape that you like to trade in, you do not have to allocate money if it's not your sweet spot. So be very, very diligent when you're game planning over the weekend. Most people started on Sunday night heading into Monday morning. Make sure that you are bidding stocks first and foremost that might have closed above today's open. Second, stocks that might have good relative strength, with an 8 might be above the 21 on the daily, or stocks that are coming into some pretty good support. If none of those criteria match the stocks that come up in your scan, it's perfectly okay to step aside if you are a long trader and let the market settle in before you get involved. Hope everybody here in the Northeast is doing okay. I hope everybody has a great weekend.